welcome back. Stocks are on track to end the week higher, and that would snap a 3-week losing streak. Dow Industrials right now up 203, S&P up 28, and the Nasdaq higher right now by 118. Federal Reserve Chairman Jay Powell yesterday reaffirming his commitment to the central bank's fight against inflation. Watch this.
So it is very much our view and my view that we need to act now forthrightly, strongly, as we have been doing, and we need to keep at it until the job is done to avoid that. We think we can avoid the kind of very high social costs that Paul Volcker and the Fed had to bring into play in order to get inflation back down and set us up then for a long period of price stability.
Joining me right now to talk about that and how to invest today is ERShares CEO Joel Shulman. Joel, great to see you. Thanks very much. You know, interesting to hear the chairman talk about fighting inflation. If you hear Larry Summers' take on it, he says, yeah, sure, you'll fight inflation, but not without 6 and 6.5% unemployment. What are you expecting in terms of a potential soft or hard landing here?
Well, he's right. I mean, well, first of all, the unemployment right now is about 3.7%, which is 2% below the historical levels of 5.7%. It ticked up from 3.5, which is near a historic low. So we're still very, very low in unemployment. The Fed is making progress. I mean, the Fed has brought inflation down from 9.1% to 8.5%. I think we're going to see a catalyst next Tuesday with CPI data being released on September 13th, and we'll talk about that in a moment. But they are making progress. GDP is slowing down. Unemployment's ticking up. I mean, it's still below 4%, and we're seeing a lot of progress in many different areas. So we're seeing, you know, even though food has come down from its highs, it's still corn and soybeans are still going up. Inflation, housing is a big part of the inflation number. Energy prices, of course, have tapered off somewhat in recent months. So the Fed is making progress, and we think there's a chance. We're still clinging to a hope of a soft landing. If we have a recession, it's probably going to be pretty mild. We've had 2 quarters of negative growth, GDP growth. Some people claim that's a recession. The MBER, based in Cambridge, Massachusetts, has not yet said it's a recession because we have such strong employment.
Yeah, and rates are going higher across the world. The European Central Bank yesterday raised interest rates by 75 basis points, signaling it expects to continue raising rates over the next several meetings as soaring inflation and energy crisis and the recession grip the continent of Europe. I thought it was really interesting to see the ECB get as aggressive as it did yesterday. Joel, what's the impact on the economy of all of these higher rates? I know you're expecting the Federal Reserve to pull off this soft landing, but as I mentioned, coming into this segment, Larry Summers says not without unemployment going to 6.5%. Yes, unemployment at 3.7%, but are we headed towards 6.5%? Impact on corporate profits and people is going to be significant in that case, no?
Yeah, well, certainly corporate profits are going to come down, and we're going to see that. We're already seeing many companies revising expectations for fourth quarter 2022, first quarter next year, 2023. And certainly unemployment is going to rise. I mean, there's no question about it. The GDP is slowing down. And so, but we've got to remember a couple of things with the unemployment, and I'll tell you why I don't think it's going to approach 6%. We've got 75 million baby boomers. And they were retiring at the level of about 3 million per year. And so there's a big gap. We've got to remember that, you know, during the height of COVID, we lost 10 million jobs or so. And many of those, and there's still a large gap between companies looking for employees and having sufficient supply. So we've got to remember one of the things that's going to mitigate our unemployment rates, the fact that we've got all these baby boomers who are retiring, who are actually delaying. They're delaying. They're delaying retirement because of inflation.
How is all of this affecting how people allocate capital? I want to get your take on what ETFs are doing well at ERShares. We're looking ahead, of course, to the CPI number next week. This is the August Consumer Price Index. You just said a moment ago things are going in the right direction. It may be a better number than we saw in July, coming down to 8.5%. Has that dictated the way people are allocating capital, Joel?
Well, I mean, we saw capital certainly leaving the market in the last week or so. We saw capital leaving. Prior to that, there were large inflows. We think next Tuesday may be a very interesting catalyst. So there are only going to be a few catalysts left in the year, key catalysts. We've got 3 Fed meetings, September, November, December. So there's 2 months off between the September-November meeting. And we've got 4 months left. So 3 Fed meetings, 4 months. The CPI next month will be potentially the second month where the Fed has made progress on inflation. Now, the reason why we're so focused on this, many people may not realize that 30 to 40% of CPI is housing. And housing right now, because mortgage rates are rising, housing's slowing down. Now, rents may still be creeping up in some areas, but the housing prices, we know housing starts are way off. Housing prices may start to fall. I don't know if they fall in many markets yet, but they will start to fall. When housing starts to fall, CPI can drop precipitously on this data. So we could see a big catalyst on Tuesday. If inflation falls from 9.1 to 8.5, which it did last month, down to something appreciably lower, that's going to be a big boost, we think, to the markets, because we got to remember the paradigm of inflation and rise in interest rates was very bad for growth stocks. And the inverse, we think, is also going to hold true, that when interest rates, when inflation starts to come down, we think many people, investors, are going to look beyond the forward-looking. We think it's going to help the markets. And so I think we're going to see choppy third quarter, but fourth quarter we think it's going to end strong, particularly with the October CPI. We think is going to make further improvement, and we think the Fed's going to probably drop their 75 basis points rate hikes in November and December to something much lower, maybe 25.
Oh, wow. All right. Sounds like you want to be putting more money to work in this market, Joel. We're going to be watching that for sure. Great to see you this morning.